BlackRock's IBIT sees $643 million daily inflow as Bitcoin ETFs hit $917 million high. Ethereum ETFs Blee. In a significant demonstration of resurgent institutional interest, BlackRock's iShares Bitcoin Trust, known by its ticker IBT, experienced a remarkable influx of capital on Wednesday, April 23, 2025. The fund recorded a staggering $643 million in net inflows during the single trading day, marking its highest daily intake since January 21 of the same year. This substantial movement into IBIT contributed significantly to a broader positive trend across the U.S.-listed spot Bitcoin exchange-traded fund landscape. According to data compiled by SoSoValue, the cumulative net inflow for all such Bitcoin ETFs reached an impressive $917 million on that same Wednesday, underscoring a strong demand for regulated Bitcoin exposure among investors. This strong performance extended a notable 4-day streak of positive inflows for these funds, which collectively saw $2.3 billion pour in over that period. This recent 4-day accumulation is particularly noteworthy as it represents double the amount that flowed into these funds during a comparable 10-day stretch experienced in March, highlighting the accelerated pace of investment entering the market. Market analysts have attributed this sharp rebound in ETF inflows, and by extension, investor confidence, to prevailing macroeconomic tensions. In an environment characterized by economic uncertainty and geopolitical instability, Bitcoin appears to be increasingly viewed as a potential hedge against inflation and a safe haven asset, leading to renewed institutional allocation through accessible investment vehicles like ETFs. The day of IBIT's record inflow was also a day of significant recognition for the fund within the broader ETF industry. At the ETF.com award ceremony, the iShares Bitcoin Trust was honored with the prestigious Crypto ETP of the Year award. This accolade serves as a testament to the fund's impact and success since its launch earlier in the year. The timing of this award coincided with IBIT's assets under management, AUM, soaring to an impressive $53.77 billion. This substantial figure solidified IBIT's position as the largest among the 11 spot Bitcoin ETFs that commenced trading in the United States in January 2024, a remarkable achievement in a relatively short period. BlackRock's IBIT was not the sole beneficiary of the day's bullish sentiment and recognition. Other prominent Bitcoin ETFs also reported significant positive net flows. The ARK21 shares Bitcoin ETF, trading under the ticker ARKB, attracted $129.5 million in inflows. Fidelity's Wise Origin Bitcoin Fund, FBTC, followed closely, bringing in $124.37 million. Even VanEck's Bitcoin Trust, HDL, which has a smaller asset base compared to the leaders, recorded positive net flows on the day, indicating broad-based positive sentiment across many of the products. However, not all funds mirrored this trend. Bitwise Bitcoin ETF, BATB, stood out as an outlier, reporting a net outflow of $15 million on Wednesday. April 23 proved to be a landmark day for IBT, not only due to the significant volume of inflows but also because it received dual recognition from ETF.com. In addition to being named Crypto ETP of the Year, the fund was also awarded Best New ETF, further cementing its status as a successful and impactful addition to the exchange-traded fund landscape. The recognition received significant positive commentary from industry experts. Bloomberg ETF analyst Eric Balchunas publicly endorsed the awards via a post on the social media platform X, stating that the choices felt appropriate to him and that he believed he had voted similarly. He highlighted that both award categories recognized achievements that were unprecedented in the market. Delving deeper into the numbers, IBIT's $643.2 million inflow on April 23 represented its largest single-day intake since January 21. On that earlier date, IBIT had recorded an even higher inflow of $661.9 million. The January 21 date is notable as it roughly coincided with Bitcoin reaching what was at the time a new all-time high of approximately $109,000, occurring shortly after President Trump's inauguration. This earlier peak in inflow suggested a potential correlation between significant market price movements or major political events and investor activity in these funds. With an average daily trading volume exceeding 45 million shares and each share priced around $53.20, IBIT continues to demonstrate its role as a primary and highly liquid vehicle for institutional investors seeking exposure to Bitcoin. Beyond the major players, the ETF.com awards also highlighted other innovative aspects of the emerging Bitcoin ETF ecosystem. VanEck Bitcoin Trust, HODL, despite its comparatively smaller size, was recognized with the Best New ETF Ticker Award, adding a touch of industry acknowledgement for effective branding within this new asset class. While the scale and consistency of these recent ETF inflows are undoubtedly noteworthy and signal increasing institutional comfort with Bitcoin as an asset class, some market skeptics remain cautious. They question whether this surge represents the beginning of a fundamental, structural shift in how institutions allocate capital, or if it is merely a temporary divergence from traditional equity markets driven by short-term factors. Analysts at Bitfinex addressed this debate in their report on April 23. They suggested that while the market is not yet at a definitive turning point, if Bitcoin can maintain its strength through upcoming economic data releases, such as the Consumer Price Index (CPI), as well as navigate volatility related to Federal Reserve commentary, from figures like Jerome Powell and corporate earnings reports, the narrative surrounding Bitcoin's relationship with traditional assets could evolve. They posited that it might shift from being seen as a temporary divergence to a more significant regime change, where Bitcoin's price action becomes increasingly uncorrelated or inversely correlated with traditional risk assets. Adding another layer to the market analysis, Bitcoin's recent price movement above the short-term holder realized price, which stands at approximately $91,000, has also fueled debate among analysts. This metric represents the average price at which Bitcoin held by investors who have owned it for 1 to 3 months was acquired. Bitcoin's current trading price, nearing $93,754 at the time of reporting, places it comfortably above this key level. The cryptocurrency has shown strong performance recently, rising by 5.6% in the past 24 hours and demonstrating an increase of nearly 8% over the last month. This performance has significantly outpaced both the S&P 500 and the Nasdaq indices, further supporting the idea of a potential decoupling or outperformance narrative. However, despite the wave of optimism driven by the strong ETF inflows, not all market participants are convinced that the current rally is sustainable in the near term. Avocado_on-chain, a contributor to CryptoQuant, issued a cautionary note regarding the increasing number of short-term holders, defined as those who have held Bitcoin for between 1 and 3 months. This pattern of accumulation by this specific cohort has historically been observed before price corrections in previous market cycles. The analyst highlighted that in the previous market cycle peak, this group of short-term holders only transitioned into being longer-term holders after the price experienced a sharp correction. This historical pattern leads some analysts, including Avocado_on-chain, to suspect that a similar double-top scenario might be developing. A double top is a bearish technical reversal pattern that can indicate the end of an uptrend. The analyst specifically warned that when Bitcoin hit its all-time high of $109,000 in January 2025, it significantly exceeded the short-term holder realized price level of $91,000, suggesting that this prior peak might have constituted the first top of a potential double top formation. Given this technical pattern and the historical behavior of short-term holders, the analyst suggested that rather than chasing the rally, it may be wiser for current holders to adopt a more cautious approach. Adding to the technical concerns, macroeconomic uncertainty remains a persistent and significant threat to the market. While President Trump's recent indication that tariffs on Chinese goods might be substantially lower than initially proposed spurred a rally across traditional risk-on assets, some analysts, such as BlackRocks, caution that this positive market reaction could potentially be a whale-driven trap. This term typically refers to large market participants, whales, artificially inflating prices to entice smaller investors to buy in before selling their own positions, leading to a price decline. This highlights the potential for manipulative forces or unexpected shifts in the macro landscape to impact the price of risk assets, including Bitcoin. Looking ahead, a pivotal moment for the market will be the release of the April Consumer Price Index (CPI) data, which is scheduled for May 13th. This key inflation metric is closely watched by investors and central bankers alike. The March CPI report had shown a cooling trend, coming in at 2.4%, which was the lowest level recorded since February 2023. Any significant deviation from expectations in the April CPI could trigger market volatility as investors reassess the inflation outlook and the potential trajectory of monetary policy. In summary, while the massive inflows into Bitcoin ETFs and the growing institutional interest represent a potentially significant and bullish new chapter for Bitcoin, suggesting increasing mainstream adoption and confidence, the market is not without its risks. Underlying technical concerns, such as the potential for a double top formation and the behavior of short-term holders, combined with ongoing macroeconomic headwinds and the potential for unexpected market catalysts, suggest that a degree of caution remains warranted for investors navigating the current landscape. The interplay between strong institutional demand channeled through ETFs and persistent market uncertainties will likely define Bitcoin's price action in the coming weeks and months.